Okay, everyone. Perry Jeffries here. First of all, just thank you to Sherry and the Ohio Black Expo for having me on here. It's just absolutely, truly an honor. So we're going to jump right into this because we're going to cover a ton of content. I'm sure we're going to have a ton of questions and understanding that the conversation and the dialogue is so broad that we can only get so much in this short window of time. So this is going to be for information purposes, just to get your brain moving in the right direction. So we're going to jump right into it. So are you accidentally killing your business? How to simply manage your finances without being a financial guru, AKA knowing your numbers. So as we jump into it here, let me cut right to it. If you're an entrepreneur, your time is valuable and you're busy, right? Me too. And nothing angers me more than wasting my time. So I promise you, I will not waste your time today because time is the one resource we can't get back. Today, I'm going to share with you some tangible action steps you can take so that you don't accidentally kill your business. So how do you know if you're accidentally killing your business? There's an 8 in 10 chance that you are. So let's just say that for the sake of conversation here, you are accidentally killing your business. And don't feel bad. These are just the stats. So 8 in 10 businesses fail. We've heard this stat before. And history will repeat itself. Roughly 20% of new businesses survive past their first year of operation. That was the case 2 decades ago, and it's still the case today. So I want you to be a part of that 20% of businesses that actually succeed. And what do those 20% of businesses that succeed have in common? Systems that allow them to know their numbers. So if you've ever followed me before or been following me, you know that I'm real big on systems and knowing your numbers. I'm going to roll this out to you here so you can see it. First, before we get into it, I'm going to give you the example here of Michael Jordan and Kobe Bryant. So two phenomenal athletes, RIP Kobe. And I share these two because when you think about some of the absolute best basketball players in the world to ever do it, you have to include these two in the conversation without a shadow of a doubt. And a lot of times you'll hear that, Michael and Kobe are head and shoulders above their peers because of how many championships they won. Well, do you know the common thing that Jordan and Kobe have with respect to their championships? I'll tell you, neither one of them won a championship until they were, one, coached by Phil Jackson, who, two, implemented the triangle offense. Let that sink in. So with all of their accolades, all of their MVPs, all of the stats behind them, they won championships when they had the same coach and ran the exact same offense, the triangle offense. So that being said, systems are huge because what systems do, quote from John Maxwell, systems allow ordinary individuals to achieve extraordinary results where they can track them. So with that being said, let's jump in here to it. Here's a quick takeaway from me. If you have not read this book, go get this book. This is the most powerful business book I've read the past decade. The name of this book is Making Money is Killing Your Business. Since reading the book, I've become friends with the author Chuck Blakeman, a super cool cat, and this book was a game changer for me. We were already in business, and when I read this, it just gave me confirmation that we were going in the right direction. So take a screenshot of this and pick this up. Making money is killing your business. In the book, Chuck speaks about that your business should have 3 systems. And again, what are systems? Systems allow ordinary individuals to achieve extraordinary results, and you can do that. So I kind of shared this with the group earlier I was speaking to today. You can take the wisest man in the world, the smartest person in the world, and set them in a country they've never been in without a map. They're going to get lost. But you can take a very average individual, set them in that same country for the first time, give them a map, and they'll find a way to their destination. So in the book, Chuck speaks about how many systems you should have, and each business should have 3 systems. The first system should be around operations, a second system around marketing, and you need to have a system for your finances. So I listened to Key Bank talk about the different accounts you can open up and things of that nature. Well, opening up in a business account is one thing. Having a financial system is something different. You need those bank accounts, but you need to have a system in place so you know how to manage those finances. And that is one of the reasons we see such a high failure rate in businesses. So today, I'm going to cover a proven system for your business finances. But before we get into that, who's this Perry Jeffries dude? That's me, known as the entrepreneur CFO. Here recently coined the profitologist, just because I specialize in dealing in this particular space. Don't want to talk a lot about me, but I think it's important that you do know the messenger who's delivering the message. So real quick recap. 17 years in this financial service industry. I've held positions with 3 Fortune 500 companies. I've held a Series 7 stockbroker license, Series 66 investment advisory license, and also 2 life, health, and insurance licenses. I have a CRPC, so I'm a chartered retirement planning counselor through the College of Financial Planning. So by their standards, I'm an expert when it comes to retirement planning for individuals and asset management. I also have a CPFA, Certified Plan Fiduciary Advisor. Under that designation, I'm an expert when it comes to dealing with business retirement plans, i.e. 401ks and pensions. I'm one of the only certified Profit First professionals in the country who is also a fully licensed advisor. Been a member of Damon John's, been an ambassador for Damon John when he brought out his book, Rise and Grind, part of the John Maxwell team. Obviously, we talked about my appearances on ABC and Fox. I've managed $80 million of client assets, and I've worked with hundreds of entrepreneurs and small business owners, not just across the country, but across the globe, as we have clients who are international. That's my background moving forward. So that may sound all sweet, like, oh man, okay. I share that with you just so you know that you're not getting this information from a novice or somebody who just started doing this last week. I've been doing this for almost 2 decades now. But I failed in business, y'all. So, I believe for us to move the needle and stop accidentally killing our businesses, it requires transparency. So I failed in businesses twice. I've built a 7-figure business only to lose it and be faced with filing bankruptcy. I've failed at building another business. The sweet thing is now I've built not only a healthy six-figure business, but one that will probably hit 7 figures here, if not this year, but early next year. So because of those failures, I've gained some valuable experiences and been able to build that 6-figure business on the back of those failures. And I'm going to share what we've put together as a result of those failures, and also to my expertise in the finance space to give you something which has had just phenomenal results for our clients. Little on my story here, I've been featured on some things. We'll move right past that. Not a big deal. Okay. So before we get started, I want you to get your mind right. I want you to first get your head wrapped around this concept. Not many people share this. I'm going to share it with you. Your business is simply a vehicle to transport you to your personal goals. I'm going to say that one more time. Your business is simply a vehicle to transport you to your personal goals. For a lot of the smaller entrepreneurs or small businesses, they intertwine their business and their personal, not only from a time capacity standpoint, but also too with their finances and also to their time. So understand this. Your business is simply a vehicle to get you to the personal goals. So you really should first, before starting a business, or even if you've already started your business, first get your head wrapped around what your personal goals are and make sure you build a business that addresses those personal goals and your lifestyle. So first and foremost, and keep that in mind, because we're going to stay with this thing for a while. So the same way a car transports you to your destination is the same way you must start viewing your business, as a means to move you closer to your personal goals. Don't just start a business for the sake of doing business. Start a business being very intentional that this business is going to transport you to someplace you want to be personally. And the vehicle that you choose depends on your business. So you see, we have a picture here, a guy on a bike, we got a SUV, got a sports car, we got a jet. The vehicle that you choose as your business should be customized and based 100% on where you want to go. So if you're going to go, down the street, maybe you need a bike. Maybe you don't need a jet for that. But if you're trying to finance a jet to go down the street, you're losing money and wasting money. So again, if you're, a single person and you only need like a 1 or a 2-seater, maybe this is your sports car. But if you're a family person like myself, maybe you need the SUV. So understand something, your vehicle, your business is simply a vehicle to get you to where your destination is. And here's the deal when we start talking about our vehicle. I hear this a lot from entrepreneurs when it comes to their finances. I'm just really, really busy. I want to look at my finances. I know I need to look at my finances. I know I need to work on my taxes, whatever the case may be. You know what? I hear it all the time. I'm really, really busy. Well, guess what? You can't fix a moving car. And then I hear this one as well. Well, I just need to make more money. Well, if we've learned anything from this pandemic and COVID-19, is that, if one thing to be making money, but what are you doing with those dollars when they come in? Because unfortunately, making more money does not fix a broken financial system. Actually, what it does is implodes the business even quicker. So moving forward here, if you were wondering, how do you know if you're in the right vehicle or if you're accidentally killing your business? Let me read these slowly here. One, do you owe taxes because you spent all the business income? We're not running a poll on this right now, but I've yet to meet too many entrepreneurs or small business owners who don't owe taxes. So this is the first one. Number two, are you using business funds to pay for personal expenses? Ooh, you know what? If I could see everybody's face right now and ask for a show of hands, I'd be curious to see everybody who raised their hand on this one. Three. Well, before we move past the move to three, two. Understand something that if you're using business funds to pay for personal expenses, effectively you're commingling funds. Commingling funds can be very risque, especially when you start thinking about litigation and things of that nature. Because if you're using your business to cover personal expenses, you're piercing the corporate veil, which in turn could expose your business to legal matters. Not to just mention that you need to know the difference. You need to separate your business and personal. Three, struggle with how to pay yourself. I'm asked this question all the time. Well, Perry, I have a business, but I don't know how to pay myself. Or I get hit with this one. Hey, Perry, I have a business, but I've never taken a paycheck, or I haven't paid myself. What? You're in business to reach a personal goal, a destination. How are you not paying yourself? Or not having being structured in a way you can pay yourself. And then number four right here, why you have no cash profits. Many a time I ask an entrepreneur, hey, is your business profitable? And they say, well, I don't know. I have to ask my accountant. So you should know without asking your accountant or your CPA if your business is profitable. But please understand that your profitability is not your income. A lot of times based upon general accounting practices that we look at our tax return and be like, okay, well, the business made this, we had this amount of deductions, and this was the profit. And then many times we're taking that profit and treating that as our income. Well, unfortunately, y'all, that's not real profit. That's that. So when we talk about profit, we're talking about real cash profit, right? Cash profit sitting in the bank. So again, do you owe taxes? Are you commingling funds, using business to pay for personal expenses? Are you struggling on how to pay yourself, or you're not paying yourself, or you're wondering why when it's time to do taxes, they said you had $20,000 in profit, but you don't have $20,000 in the bank? If you answered, wait, any of those symptoms? Well, first of all, does any of those symptoms sound familiar? Is this your business? Then there's a good chance you're accidentally killing your business. So over the years, I've worked with hundreds of entrepreneurs and business owners, and I have yet to meet one, not one, who is not suffering from at least one, if not all four of these issues. So why does this happen so often? Well, it comes down to mathematics, knowing your numbers. I asked a question the other day on Facebook. What numbers do you track for your business? Inevitably, this is what we heard. We heard, well, I track how much money is coming in, my gross revenue, and I track my expenses. Y'all, it's more numbers than that you need to be tracking. So math can be overwhelming, especially if you don't know what numbers to actually track. So knowing your numbers and what numbers to track is called financial intelligence. And my friend Damon said it best: entrepreneurs don't need access to capital. They need access to financial intelligence. What we're seeing right now, if we were to give you a loan and you did get approved for, the PPP, or you got the EIDL, or whatever the case may be, what are you doing with those dollars? Because unfortunately, if you don't have a financial system in place, you're going to put yourself in a worse situation for later on than you were before the pandemic, because you have to have a system which allows you to make good decisions. So lack of financial intelligence is not having a financial system, and not having a financial system is the cancer that will slowly kill your business. So before we get into kind of the P.A.S.S program and the pieces with it, I'm going to share this with you, and I know this is going to rub some people the wrong way, but my job is to be very transparent with you, and also to give it to you truthfully. What the pandemic exposed was how many businesses were going to fail anyway. And I know that's going to hit some people the wrong way, but it's the truth. And the reason I can say that is that's when I first lost my first 7-figure business. I lost it during the real estate boom. So from 2001 to about 2007 or so, I had built a $4 million real estate portfolio. And obviously, you remember when the market crashed in 2007 and 2009. Well, I could easily say, hey, the reason I lost $7 million in real estate was because the market crashed. Well, everybody didn't lose their $1 million portfolio during the market crash. Why did I lose mine? Because I did not have a financial system in place. And all the crisis did was sped up what was going to happen to my business anyway. Because of not having any financial systems, because of commingling funds, because of not paying myself, because of not separating assets out, that business imploded and went away. So again, what we've learned from the pandemic, if anything, if you don't have a financial system in place, granted, even if your income or your revenue was cut to zero, with the right financial systems in place, you will be positioned the right way. And for those who didn't have financial systems in place, that's why it's being so hard for them to go ahead and get funding, because you don't have the necessary components to a financial system. All right. So let's dive into it. Here it is. This is the 8-step proven process to help you stop accidentally killing your business. It starts with vision. So vision, being crystal clear on where you're going to go. It starts with assessing the business. So not putting your head in the sand, but really, really looking at your numbers and having an expert actually walk you through what numbers you need to track. Then it moves to establishing the right structure and setup for the business, including all of those accounts that you need, business accounts you need, and credit accounts you need, and things of that nature. Then it comes down to being able now to analyze the business in terms that you can actually understand and digest. Then it goes to streamlining the business, leads right into how do you finance the business. So this gets into your lending and debt management, taxes, and then ultimately growth. Too many times we skip steps, and this is broken down in a very sequential order on purpose. So make sure you take a quick snapshot of this, screenshot of this: vision, assess, establish, analyze, streamline, finance, taxes, and growth. Before we can even think about considering growth, we first need to go through these steps. And let me break them down here for you. So first step, vision. Where do you want it to go? You have to get crystal clear on where you want to go. Not how much money you want the business to make, but how much money you need to make. What is your personal goal with your business? A lot of times you have a lot of entrepreneurs who are open up a business with a business model that mathematically is impossible on paper for them to reach their personal financial goals. So then they just get on a hamster wheel and they're running, from trying to keep the business afloat, because they never sat down and said, hey, this is my actual personal vision, personal goal for my business and where I want to go. And now how do I build a business and price my products and my services in line with that? So that's the first step. So how much income do you need? This right here is how we help entrepreneurs and small businesses determine how much they need. We know a healthy business, and I have highlighted right here the business 0 to 250. A healthy business between 0 and 250 is going to have 5% in cash profit. That's cash on hand. 50% of the top line revenue is going to go towards owner's compensation, 15% for taxes, and 30% for operating expense. So if we reverse engineer into this number and you tell me, hey, Perry, and I ask you, hey, how much personal income do you need to make from your business? If you tell me you need to make $50,000, then by simple math, I know that your business needs to do a top line revenue of $100,000, because $100,000 in top line revenue would give you $50,000 in personal income while still covering your taxes, operating expenses, as well as making sure that you have cash profits. I'm sure we're going to have some questions on that. I'll be happy to answer those at the end. But first, again, start with how much income do you need? Step two, assess the business. This is where we go through a full profit assessment. So again, if you already have a pre-existing business, we need to, after you determine, redetermine where you want to go personally. Now, what we have to do is get crystal clear on what is profit. What is your GPS to profit? If you're looking to go from a four-figure business to a five to six, a six to seven, a six to eight, you need a GPS, because guess what? If you're a six-figure business and you've never been a seven-figure business, you don't know how to get there. So the same way we get into a car and we're going to a destination and we turn our GPS on so that we can map out the most efficient route to get there, we need to do the same thing with this section in here. So step two, assess the business. So how we assess the business is going, if you think about that previous screen, we know based upon income, top line income, the top line revenue, what those income bands look like. This is how we assess the business. So this is actually a true assessment from a client of ours. Okay, great. Your top line revenue is 275 for the year. Okay, how much did you set aside? How much did you need for materials and subs? Well, they didn't need any for this particular business. So their real revenue is 275. How much did you set aside for profit? Well, Perry, nothing. So you set no cash aside and said, this is profit for the business. No. Okay. How much did you actually pay yourself out of the business? Well, I paid myself 42,500. Okay, great. So that means that, when I asked the question right here too, so how much did you proactively set aside in taxes? Not scrambling at the end of the year to figure out how to pay taxes or adding a whole bunch of tax deductions to the scenario so that you can reduce your taxable income. How much taxes did you proactively set aside and make quarterly payments on? None, Perry. Okay, so it's fair then to say that 232,000 of that 275 is your operating expense. Well, these are the target allocations where that business should be. They should have 10% in profit, 35% in owner's comp, 15% set aside for taxes, and be able to run a business on 40%. So when we looked at this over here, though they had zero set aside in profit, with the right financial system, they would have been able to tell me, hey, Pierre, I have 27,500 set aside in a profit account at the bank. Hey, Perry, I was able to pay myself $96,000. That's a big difference from 42.5. You know what? I did set aside taxes, 15%, up to 15%. So that 41.2 is set aside. And I have a very streamlined business where I'm able to run it on 110,000. So again, you need a GPS. So granted, this particular client wasn't there, but now they know what those numbers should look like. And now we have a GPS with respects to what profitability, true profitability looks like in success in the business. So moving right along. Step three, establish and choose the right vehicle. So this is establishing the right accounts. So we started this off earlier, y'all, by saying, hey, your business is a vehicle to transport you to your personal goals. Well, you better choose the right vehicle. We go about this by using and leveraging the concept of profit first. Another book here for you, y'all. So I'm gonna give y'all a ton of value. So profit first. If you haven't picked up the book, pick up the book. The book is by Mike Michalowicz. It's a bestseller and is completely revolutionized the ways that entrepreneurs manage their cash flow. And again, I mentioned earlier that I'm a certified profit first professional. So the way, in short, because we could spend 2 days going through this, but in the time that we have, in short, I'm just going to give you, the fundamentals. You establish 5 foundational accounts. So each business should have 5 separate business accounts. It should have an income account, an account that receives all the income, a profit account. We're going to take profit first, which is completely pushing against what most of our CPAs and tax accounts are going to say. If we have any on here, they're probably scratching their head like, well, how can you take profit, right? Because most of us have been taught that your profit is what you have left after your expenses. That's should not be the case. You're in business to make a profit. So probably the first thing that should be established and pulled from the income is the profit. What's next? Tax account. The other thing that's super important, because if you don't pay your taxes, you can go to jail. Owner's compensation, operating expense. So notice we have 5 accounts set up here. So again, we can contact our people at Key and be like, hey, we're following a profit first system. We need to establish 5 accounts, not just one. The way it works, money comes into the income account. Everything, any money that you make comes into an income account. And then periodically, you're going to move money into a profit account, a tax account, owner's compensation account, and an operating expense account. By doing this, you eliminate the temptation to commingle funds. You eliminate the temptation to overspend and not have money at the end of the year to pay taxes. You eliminate the opportunity for you to, not pay yourself because you're paying yourself systematically. So in short, money comes in to the income account. Periodically, money is moved to a profit account, tax account, owner's compensation account, and an operating expense account. To see this in real time, this is a real scenario for a client of ours. They had $12,000 in their income account on the 10th. Based upon the percentages that were established initially, they moved $120 to a savings business account. So guess what? The business is immediately profitable today. They move money to their tax account. So guess what? They're not going to owe any taxes. Why? Because they've already taken it off the table, and they won't spend it. Why? Because out of sight, out of mind. They paid themselves. Answer that question about how do you pay yourself? And an operating expense, now, instead of thinking, oh, I have $12,000 to spend, now you only have $6,000 to spend. So what kicks in is what's called Parkinson's law, which pretty much says that if given the opportunity to spend a resource, we're going to find a way to spend all of it. So case in point, if I were to give you $1,000 today and say, hey, here's $1,000 for your business, you're going to find a way to spend all 1,000. If I give you that same $1,000 next week and say, hey, here's $1,000 for your business, but I'm going to hold $200 of this, and you can get it only, from a break glass in case of emergency standpoint, you are going to figure out how to run your business on $800. We've learned that with the pandemic here. A lot of folks have figured out that they can run their businesses, not only their businesses, but their households on much less than what you were used to getting. Okay. That's Parkinson's law. We established that for the business, and we separate these accounts out. And then kind of next month, on the 25th, not on the next month, but the same month, okay, 7,500 in account. Guess what? The percentages stayed the same. You just moved them. So these percentages are not your percentages. This was just the percentages that this particular client started out at and worked our way to the ideal percentages. I just want to give you an example of what that looks like. Step 4, y'all, hang in with me. We're halfway through. So step 4, analyzing your expenses. So this is where we look at amenities versus necessities. And again, if we ain't learned anything from COVID-19, we learn what's an amenity, a want, versus what is actually a need. So I like to do this through what's called an expense ROI investment analysis. It's a long-winded way just to say, hey, am I making any money on that thing that I'm spending, right? So the way we look at that is we get everything broken down. So this is actually a snapshot from a client. So this is real. We looked at all of their expenses to get an idea of the total expenses they were using. And then what we did was attach the value to that expense. So in this case right here, he's paying his one employee $271. I asked him, I said, what's the value that employee generated for you? Oh, about $400. Well, great. Now you know that $271 actually had a 47% return on investment. But guess what? I asked him about this deal over here. What's the seminar expense? Oh, well, Perry, I paid this company $1,300 a month to put on a seminar, help me put on seminars. I said, how much did you make last month off that seminar? I had a lot of people in there. Then actually I had a lot of people. I said, actually, how much money do you make? He said, 500. I said, So that is a negative 61% return on investment. So let this sink in for a second and kind of go back up here, even to this advertising and promotion. This particular spin right here got him a 220% return on investment. Well, y'all, instead of guessing and thinking that something is working, put it on paper. I tell my clients all the time, if it doesn't make sense on paper, it will never make sense in real life. So now he was able to look at his business and be like, oh my gosh, I should stop spending this $1,300 here, reallocate it to this because that's a 220% return on investment. He increased his revenue tremendously on the same amount of money per month. Step 5, streamline. So now that we've done a good job identifying what we need to keep and what we need to let go, now you can streamline the business, and now you can create a business budget, because the business budget isn't created on the front end. It's created based on the data that we analyze. Step 6, now that you streamline your cash flowing, you've gotten rid of all the fluff and stuff that you don't need. This is now where we look at lending and debt management. banks love working with my clients because they can walk in with this system, and the bank can immediately analyze if they're credit worthy or lending worthy. So, the credit is one thing, but also too, if you're a business, after they get friends looking at your credit, shoot, what I'm saying? If you have strong financials, a strong cash flow, which can support it, then, what I'm saying, you may still be in the game. So again, how do you look on lending and debt management? And then also too, now that you have a system in place, you can annihilate debt very quickly. Taxes. Now you're in a position where you can do phenomenal tax planning, right? Not the janky tax planning that, oh, it's the end of the year, and now let me go and put down that I had all these deductions because I'm trying to reduce my taxable income, right? From 50,000 to make it look like I made zero, so I don't have to pay in taxes. Too many of us are playing that game, and that game has came back to bite a lot of us in the butt during this pandemic piece. Because now, when you go to get if you were going to get financing, one of the things that they want to see is, hey, is your business actually profitable? Is one of the things, hey, what is your annual expense? What is your profitability, especially if you're self-employed, right? So if you made your business look like you were dead broke on paper, shoot, that's not going to work. So again, tax planning, and also too, maximizing all the additional tax deductions that are available. I see this more times than not, that so many entrepreneurs and business owners leave money on the table because they're depending on their tax person to give them tax advice. Unfortunately, and no offense to any of my tax preparers or accountants or CPAs on here, but it's the truth, most people in that industry are reactive versus proactive. They take the information that you give them and say, hey, here's my, here's my receipts, here's my statements. And they come back and say, this is what you owe in taxes. But you actually need to have individuals who are proactive to say, hey, make sure you ask, hey, let me take advantage of the HSA. I saw where Key Bank spoke about that. The HSA is one of the best accounts you can ever pick up because it has triple tax advantage. It's tax deductible when you put it in, so it reduces your taxable income. It grows tax deferred while it's inside the account. And if the money comes out for qualified medical expenses, it comes out tax free. Why wouldn't you be doing that as a business owner? That should be one of the first things you go set up, because again, it makes you look good on paper, and it's not, oh, this is an expense and you're trying to just reduce your taxable income. But I could spend all day talking about that. Now, ladies and gentlemen, you're ready for growth. Growth now, because you have a financial system in place, you can now look at your business and understand where you can expand, where you can spend, what you shouldn't spend, what you have available to spend, while still getting you closer to reaching your personal financial goals. Okay. What this comes down to, y'all, is the 3Ds. I say every business should be able to, every entrepreneur, every small business owner should be able to see their business in 3D. 3D allows you to make data-driven decisions. I've yet to see good financial decisions based on emotion. When it comes down to working with any of our clients or giving recommendations, we say, hey, what do the numbers say? But it's not just how much money I make and how much revenue the business generated, or this is the monthly expenses. We need to be looking at profit, taxes. We need to be looking at an ROI analysis on all of our expenses. There are so many more numbers that you as the entrepreneur need to understand and get crystal clear on. Because if you're crystal clear on your numbers, you can have a successful business, because those numbers are going to help you dictate everything. But you have to have a system that you can actually understand. So that's my piece there, y'all. With respects to how to connect with me, you can obviously check us out on Facebook, LinkedIn, Instagram, YouTube. We just recently launched a podcast called Profitology with Perry Jeffries. Definitely go through and check that out. We rolled that out with about 15 to 20 episodes of the COVID-19 Survival Kit series. So some great stuff on there. And then obviously you can go check us out at perryjeffries.com. I highly recommend that you go there. On that website, on the actual homepage, as soon as you get there, you can actually register to get a free training. So this was a quick kind of a, short abbreviated version because of the time frame that we had available, but you can go there and get our full training on this, where we walk through those steps in more detail and more clarity. And then obviously, if you want to schedule a consultation with us here, you go to www.mycfo.ask.me /increase my revenue call, and we'll be happy to connect with you and do a complimentary no obligation strategy call for your business. And that concludes my presentation, y'all. And I will stop my share and see what questions we have, if any.
Looks like we have a couple questions for you.
Okay. Where do you want me to? Oh, can I see them? Are they already in the chat? Okay.
They are. I can read if you want. Would that make it easier?
Oh, no, I'm looking at the chat now. Let me see here just where I need to start at. Priest, boom, boom. Place your question. Cool. Are you saying we need to have different accounts? Ooh, are we saying we need to have different accounts for each vehicle? So here's the deal. If you have one business, that business should have 5 separate business accounts: an income account, a profit account, a tax account, an account to pay yourself operating expense. Pay yourself owner's compensation, and an operating expense account. So that's what I'm saying there when you say you should have separate accounts. Boom, boom. How do I know what percentage do I pay myself as a business owner? So the deal is, by having that GPS, and again, why we kind of use that profit first strategy, they've done all the heavy lifting for us. So they have, researched and diagnosed, tens of thousands of different companies and given us a guideline to say, hey, as the business owner, this is the percentage. If you're making this amount of income, this is the percentage that you should be paying yourself. Now, there will be some variation in there, but at least it gets you in the ballpark. So, like, oh, if I have $1 million company, then I should be paying myself, roughly 30%. If I have a company that's doing less than $250,000, I should be paying myself 50%. Well, Perry, why am I paying myself a larger percentage on a smaller income? Well, because if you have $1 million company, you're not doing that by yourself. You more than likely have staff and employees and things of that nature. So it kind of works itself out that way. So it's kind of getting that GPS. So I would say definitely go get the Profit First book. Because in that it's going to show you those charts of those income ranges, and so you can kind of identify if you're in the right place. And don't fret if you don't start there. It's where you end, because unfortunately a lot of people are starting at 0, and you just going to have an idea of kind of where you need to go. Okay. When donating service or money to a good cause, what percentage should you donate? Totally up to you. So I had this conversation with one of my clients with respects to tithing, right, and giving back. She said, well, Perry, do I tithe off of my top line revenue of the business, or do I tithe off of my personal income? And I asked him, I said, well, if you was working at a job and you didn't have a business, would you be tithing off of what the business did, off of the company you work for? You know what I'm saying? Or would you, so if you worked at Key Bank, and Key Bank is doing, $10 million a month, are you tithing off of that, or are you tithing off of your paycheck? So I would look at, whatever you paid yourself. And then if you're doing, 10, 20%, start there. Let's see here. Mr. Jeffries, thank you for your input. Would like to contact you for some guidance. Yeah, Andrea, absolutely. Hopefully you took a screenshot of the contact information. We can definitely throw that in the chat, but yeah, definitely reach out to us. Real easy. If you just, my email is cfo@perryjeffries.com. Or if you go to perryjeffries.com, you can contact us. And then we're all on social media. Do you need to have percentage based on the industry in? So it's going to vary. So like I have a client who's a contractor, electrical contractor out in Brooklyn, and his business is doing $1 million plus. And, so his percentages are going to be different because so much of his money that he brings in goes to materials and subs. So though we have those guidelines with respects to the income ranges, so whether you're doing 0 to 250 or, past $1 million or 5 million plus, or whatever the case may be, the percentages could vary depending on the industry. And then also too, that's why it's good to have that CFO or that second set of eyes to kind of help guide you a little bit, because having that second set of eyes is huge, because you can be like, you know what, you don't have a lot of expenses. Let's move those percentages. So instead of you having, 50% or 30% for operating expense, maybe you reallocate that towards, some other things kind of based on your industry. But fundamentally, it starts off the same. The name of that book, The Profit. Okay, so note, I gave you 2 books there, Andrea. First book was Making Money is Killing Your Business by Chuck Blakeman. The second book is called Profit First. So PROFIT space first, 2 words, Profit First. what headset are you using? It's very clear. So when I was on Entrepreneur on Fire, they told me like literally, it's like, hey, before you get on this international podcast, your sound needs to be on point. So it's a Logitech something. Hold on. Let me see if I can bring it up for you real quick. It's a Logitech USB headset. So people talk about me because they say, "Hey, man, you look like a pilot about to fly off." But I could care less about how I look and how I sound. So thank you for that. When you say separate accounts, are you saying 5 actual bank accounts or use the term account? Oh, no, 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 no. 5 separate bank accounts. So here's the deal, y'all. Most of us as entrepreneurs didn't go to school to know how to read a P&L accounting sheet or understand QuickBooks and things of that nature. So the deal is may not understand that. We may not know how to sell our product or service, but we might not understand how to read financial documents. But the one thing I guarantee y'all know how to read is your bank statements. So by having 5 separate accounts, literally, I'm not figuratively, 5 separate accounts at any given time, you can jump on your phone and be able to be like, let me look at my balances. It's $10,000 in my operating expense. It's $2 in my owner's comp, right? It's $10,000 in my profit. I'm 5 separate accounts because you need to be at any point in time to be able to take a snapshot of your business and not have to call your CPA or your bookkeeper to know how profitable your business is and what your cash flow looks like. So what we've done is taken a very complicated concept and got it in a way that you can actually digest it, and you as the CEO and president and owner of your business can make strategic decisions, because you can't make strategic decisions if you don't know your numbers. So I'm not asking you that you need to know your, you know what I'm saying, all your tax accounting numbers, but I guarantee you understand balances. And quick story with that, y'all. It was funny when I first implemented the SMILE system, because I was one of us, commingled everything. And I remember I was called my wife up one day and said, "Hey, we got anything to eat at the house?" She's like, "Nah, the food, you know what I'm saying, meat's still defrosted." And I said, "Okay, I'm gonna go pick something up." Well, pull up my account, and because my accounts were all separated out, I noticed that even though I had several thousand total in there for the business standpoint, what I had in my owner's compensation was like $100. I said, under normal circumstances, because I got stacks in there, I go pick up something to eat. I didn't. I called my wife back and said, "Baby, based on the way my owner's compensation is set up, I'm gonna go ahead and cook that meat when I get home." So it allows you again to make strategic decisions on the fly with good information. What other numbers should we track? ROI, expenses. I had somebody posted this other day. Another numbers you should track. How close are you to your revenue goal, right? You know what I'm saying? Your KPI. So you have what's called KPIs, key performance indicators. Not to go down the rabbit hole in this, because again, I can do this all day. But for every aspect of your business, you should be tracking numbers. So you're called KPIs, key performance indicators. So you should be tracking anywhere from a mark. So let's use marketing, for example. You should know your leading KPI as well as your lagging KPI. Leading KPI is the action you're taking. Uh, um, um, Lagging KPI is the result, and leading is the action that you're taking. So case in point, you do a Facebook post. Okay, great. That was the activity that you took. So that is the leading indicator. So the lagging indicators, well, how many likes did you get? How many shares did you get? So you want to start looking at things from that granular number, because each area of your business, all the way from awareness to lead generation, sales opportunities, fulfillment, referrals, you should be tracking numbers. So you should honestly be tracking probably, 10 sets of different numbers. It's just not revenue in that. So depending on how your business is set up, you need to be tracking those key performance indicators, because that lets you identify where you have bottlenecks in your business and how you can increase revenue. Excellent information. Cool. I think I got through all of them. They're rapid fire sharing. There's any other questions? I tried to get through it pretty quick because I know we kind of short on time in the whole nine, but I hope y'all that resonated with y'all and we stop accidentally killing our businesses, because last but not least, I'll share this, why it's so important for us to get this right, y'all. In 2017, there was an article published because I was curious to it. So I started researching, what is the leading indicator of wealth in the United States? And up until 2017, the leading indicator of wealth, leading driver of wealth in the United States was inheritance, which means your wealth was pretty much predetermined by what you received from previous generations. Let that sink in, right? So, life insurance. I see my auntie Sandra Moody on the call. Right, having right life insurance, being able to create that legacy, being able to pass that on, or passing on businesses, or whatever the case may be. So inheritance was the leading indicator. But in 2017, inheritance stopped being the leading indicator of wealth creation, and entrepreneurship became the leading indicator of wealth creation. Which means, the playing field has been leveled. But with the 80% fail rate, even though that's a leading indicator of wealth, if we don't get it right, it's not going to make a difference. So getting it right is really knowing your numbers and building your team. And again, having systems for those three areas: operations, marketing, finance. And what I specialize in is the finance side. So again, you need three systems, because especially if you're a solopreneur, there's no way you can manage all of that, right? And if you're not in a position to hire a full-time CFO, so full-time CFO, I think median income in 2019 was 371,000. If you're not in a position to do that, then what you got to do is hire somebody to help create the system so that you can drive it, and but still have that, expert there. You know what I'm saying? To kind of look over your shoulder and identify blind spots for you.
All
That's
right,
my
thank you so much. I don't know what to say. We're about a half hour behind again. I got us caught up to being 15 minutes behind, but I just couldn't cut you off. No pun intended. But Diamond Equity just dropped gems all over the place. So thank you so much for your insight and that
word.
information. And again, if you want to get in touch with Perry, Perry, if you can go ahead and leave your contact information in the chat, but you can also go to ohioblackexpo.com, the same page where you registered for this event, and hover over Perry's picture. You'll see some links there for his website and social media contacts as well. So thank you again. We're going to keep moving so we can try to be out of here on time. And next up, we have Sandra Moody. And I'm so excited to hear from her. I have heard her speak and present a number of times, but I always learn something. I always learn something new. And I love that about you. So